Thank you for everyone to join another session of Wednesday Real Estate Investment Webinar. As always, I start with defining the purpose and why we have this Real Estate Investment Club. My name is Ashton Ekbatani. I am in real estate investment for over 15 years, investing everywhere, GTA and the cities around it. The reason, the goal for this real estate investment webinar is to help you understand and get you equipped to move from what we call an average investor into savvy investor. My screen just jumped. So there are many things that if you are not a savvy investor or educated and informed investor, that you're going to miss out. And I believe that real estate investment is not a game that you can play with it. You have to really know what you do. It is a game actually, but you don't play with fire. There are a lot of money on the table and you cannot risk it. It's very, very easy to burn if you don't know what you're doing. Now, learning tools and materials. Usually at this moment, I will take you to the market in Toronto to see what's happening in Toronto. I covered that session last week, but I want to give more time to our guest today to elaborate and tell us his story and where he's coming from and the direction he goes. So very briefly on learning tools and materials. As you know, I have my YouTube channel where you can find a lot of videos on real estate investment and anything to do with real estate. I also buy and sell as well. So there are some clips in that regard as well. Now I have my Facebook for investor, and you can go there, here and there. There are articles, there are more interesting information, and sometimes there are deals that I put up there for you guys. I publish few books. Two of them are here. You can get them from Amazon.com. One of them is about thinking beyond your limits, and I believe that's going well with real estate investment because a big portion of investing in real estate is your mindset and the readiness that you have to have in order to start. Without further ado, I'm going to introduce our special guest today, Fraser Nybo. He is a savvy real estate investor that started many years ago, and he's the founder of his company, YXL Real Estate Investment. I put his email address here and with his permission, his phone number. He is good with mentoring and giving information to whoever is interested. And voila, Fraser, floor is yours. Now tell me how you can have your full screen on the computer. Like I see you small. Let me share. Let me see if I can.
How's that?
I still see you small. So stop sharing. Okay, now it's better. Well, I had one of our friends here called Lola. She's not here, but I'm trying to see if I can put you to full screen. Okay, Fraser, you can go ahead. I'm trying to play with this, see if I can get you to full screen.
No problem at all. Awesome. So hi, everybody, and thanks, Ashton, for having me on. I really appreciate it. I'm looking forward to it. And yeah, my name is Fraser. I'm a real estate investor. I'm out in Saskatchewan. I started buying property about 10 years ago, and we've been just growing our portfolio ever since. I started out basically burning properties. I started with my own house. I bought it 5% down, moved into the upstairs, and I got in the basement, out of the basement suite. And that was a whole learning lesson. It was one of those projects where it was going to be over and done with in a few months kind of thing. And it turned out, I think it was a year and a little bit that I ended up working on that property, getting the basement suite ready to rent out. But I ended up getting it rented out, and I saw the power of passive cash flow and just kind of grew from there. So we bought another property a few years later, did the same thing. And yeah, we basically just kept compounding. So that was 2010. I think that was my first property. And to back it all up, like I grew up on a farm in southern Saskatchewan. I have a good work ethic. I like working with my hands. And then after high school, I went into the oil field and I worked for a company on a drilling rig for about 3-4 years. And then I wanted to be home a little bit more, so I left that job and I came back to Saskatoon, and I actually got into a mining company. And I've actually been working at that mining company for quite a few years now. So it's that's basically what got me into my first house. So I started that job in 2009, bought the first property in 2010, and then kind of just jumped from there. So bought another property in 2013 with my girlfriend, now wife, and same thing, lived in the basement while we rented out the upstairs. She works for a major airline, so we traveled lots. So we thought we might as well rent out the upstairs, get the most amount of money that we can get for like what we have, and live in the basement. So we did full construction in the basement, and I'm talking like cutting concrete. It was a lot of work. It was one of those situations where the bedroom was the kitchen, the like where we slept. It was the living room. It was one room. Everything else was gutted. So we lived through that for quite a while, and then yeah, got the upstairs, or got that all finished up, and then we bought another place out in Montreal in 2015. So my wife is from Montreal originally. So I was talking with Ashton about this just prior to the call here, and so it was kind of funny. We had five doors or five rental properties, and we were still living in a basement suite. So I got a lot of flack from friends and family and stuff like that. Just like basically like, you got to get up on a main floor at least, or buy your own house. Like, what are you doing? But we knew what we were doing and where we were going, so we just stuck with it. And then in 2017, I think we got our first, like our primary residence, our first house alone. And yeah, and then after that, we started kind of just really getting into real estate, really taking the market serious, learning about what we needed to learn, getting around the right people, and we started raising capital. So that's been the biggest contributor to our growth, like hands down, is just being able to raise capital and find that money for almost any deal that you want to do. It's that's my favorite part for sure. Oh, I think you're muted, Ash. Oh, can't hear you here. Oh, I think you're still muted, or it says you're muted in the corner there. Oh, there we go.
Okay, sounds good. Okay, my question here is, at what stage did you realize that you got stuck, you're hitting the wall, you need more money to buy the next one? And before you answer that question here is, you had the desire to continue purchasing. So where that desire is coming? So you got to the point that you said, I really like to invest in real estate because the money grows. What was your motivation?
So my main motivation was just getting passive cash flow. So I like I said, I worked a 9 to 5 job in quotations, and it was actually shift work. That's why the quotations. But I wanted to get out of the rat race, so to speak. I really liked real estate, and I knew that there was something there. I knew that you can make a living doing that, and that is the first step into getting basically freedom, having full control of your time, which I think is extremely important. So that was definitely the main motivator, just being able to create passive cash flow. So, and
That's
then,
where you started.
yeah.
And tell us about how you approach different people. What was your speech? What did you tell them? How did you motivate them to step into an agreement with you to purchase? And then I'm going to ask you more questions on that.
Yeah, so how it started out with our first investor, he was actually an agent of ours. So Vanessa and I, we've done all these renovations. Vanessa's my wife. We've done all these renovations for 7 years at the time, and flipped houses to ourselves essentially. So when we started working with this agent, we really like spent a lot of time with them, looked at a lot of properties. He knew that we knew our numbers. He saw what we saw in the ability to buy a house, renovate it, and sell it for a profit. And we did have somewhat of a track record to begin with. So yeah, basically I got into this network, met this realtor, worked with him for quite a while, and then he was actually our first investor. I actually found the property before him and sent it to him and put it under contract, and he wanted to partner with us on that. And it's actually funny, I found one 2 weeks before. So how it actually worked out is we bought our first property, and then 2 weeks later we bought our second property. But our first property was tied up in probate, and it was held up for like no, I don't know, it was like 6 months or something. So we had our own capital tied up in that. And then the second property came up, and I knew it was such a good deal. I just put it under contract, not knowing where the money was going to come from, but knowing that there was people interested, just because I've been having these conversations with people for so long. And then, yeah, it was that agent that essentially stepped up and put the money up, and it was a good flip. It was pretty profitable.
And how did you get the second investors to step in?
Well, we on the first property that we bought, my wife and we actually did that one ourselves. So we applied for a mortgage, just conventional financing. So.
Okay, and was there any other investors that stepped forward to put some money for you to buy your investment?
What do you mean exactly?
Well, you had one investor step forward. Now, was there another investors that you said, well, by the way, you did a good job, so let me get involved as well?
Oh, yeah, I see what you mean. Yeah, and then once we did that one property, it just kind of snowballed. A lot of people saw what we were doing. We were putting this up on social media and advertising, so to speak, just what we were doing. And it started like a little frenzy, you could say. And just people I haven't spoken to in about 10 years started coming out of the woodwork. And they were like, I see you're into real estate now, and I have a house I'm thinking about selling, or I'm interested in potentially investing with you. How do I go about doing this? So then that opened up the door just to so many more conversations. It was crazy.
So great. And how do you qualify those properties?
So it depends what kind of property. So we have a wide array of properties that we look for. So we can, like if we buy a house, it can fall into a few different categories. We can either A, flip it, B, keep it as a rental, C, I can wholesale it, which is basically buy it, turn around, clean it up, like close on it, clean it up, and then resell it. And I'm doing these, I'm selling, like buying properties and selling them 11 days later for pretty large profit right now. So.
And is MLS the only way you find these places, or you have, at the beginning at least, or you had some other method of finding your investment?
Yeah, so at the beginning it was mostly MLS, and then we started just talking with people and telling people that we're buying houses, we're looking for properties to flip, and then I had a lot of people actually approach me looking to sell their houses off market. So now I would say a majority of our houses come from off market for sure. But we've also stepped up our game in finding properties. So we do like flyer drops. I do a lot of online stuff. I do just lots of different stuff to find properties. And we're actually hiring salespeople right now. I'm building out the sales team to find these properties. So it's a lot of fun.
Excellent. I'm glad you like it. Then that's very important. Are you still, now tell us about multiplexes, your projects.
So we got into multifamilies in 2019, last year. We bought our first 16 plex. So we, like, just to give you a little bit of insight, the property, it was 16 units. It's a 3-story wood frame building. I would call it a B minus C area. So it's as far as we go. I wouldn't go into any tougher areas than that, but it's great. It's cash flowing really nicely now, and it's like management's good, and it was a learning experience for sure. But that's pretty much the property in a nutshell. And the purchase price was about 1.4 million. So I bought it at about 87,500 per door, which I like to say in Saskatoon on average, properties, multifamily apartment buildings are going for roughly 100,000 per door. And obviously there's a lot of variables, like if it's all 2 bedrooms or all 1 bedrooms, and the location, it all plays into it. But just on a general average, I think that's a pretty safe thing to say.
And how did you find that multiplex?
So I actually found that off market also. No realtors, and that's part of the reason that we got such a good price on the property. I just got a lead basically of somebody who was potentially looking to sell. So I picked up the phone and I phoned him, and I talked to the wife. This is actually a pretty funny story. The wife answered, and I just said, "Hi, my name's Fraser. I'm looking to buy apartments in the building. And are you the owner of 1111 Avenue D, the property that we own?" And she was like, "Yes, actually." And I was like, "Have you ever thought about selling it?" She was like, "We have actually." So she said, "I don't know enough about it, but my husband's at the building right now. So if you want, you can go and talk to him." So I got in my vehicle, drove to the building. He was outside, and he was hauling a stove into one of the units. He was changing a stove out, and he had a helper with him, but I don't know really where the helper was. And so I told him who I was. I walked, and then he shows me a little bit of the building. He shows me, I think, 2 of the units. We go down into the mechanical room, into the laundry room, and I've been analyzing a lot of properties at this time. Like I've probably analyzed 40 or 50 properties. So I knew what I was looking for. And he finished showing me the mechanical room, and he's like, "Hey, I'll let you think about it a little bit. I'll be up in the unit that we're doing the stove. So just come up there when you're done." So I remember I was on the washing machine crunching numbers, writing stuff on my notepad, trying to make this deal work, and like, what can I pay? So knowing the market, knowing the area, I do know of the building. It was in a lot or heavier disrepair, you could say, a little bit down the road or in the vicinity, I guess. And it went for 66 and some thousand per door. So that's originally what I started at. I believe that comes out to 1.1 or 1.2 million on the 16 units, just numbers off the top of my head. And so I penciled it all out there and figured that's a good starting point. So I went back up, and he was actually out by his truck unpacking the stove, like taking it out of the box. So I helped him haul the stove up into the unit. And it was kind of surreal, like, that's what I like to say, because we were kneeling down by the stove and we were taking the stickers off and all that stuff. And the tenant was kind of pacing behind him, and we're in the kitchen, and his back was to the tenant. So we're negotiating price. So I was like, kind of lean in, and I'm like, okay, I thought of a price that might work for us. I forget what it was. It was 1.2, I think, 1.2 million. And he just says, he's like, "Oh no, that's way too low." He's like, "We were thinking 1.5. And then I was like, "I can't pay that. What about 1.3 million? Would you do that?" And he's like, "No, the lowest we can do is 1.4, and that's as low as we'll go." So I told him I would think about it. I helped him finish, and I went home and crunched some more numbers, looked into it a little bit more. And I called him back the next day, and it worked for us. The numbers all looked good, so I told him we'll take it. So we put it under contract, and I didn't have any of the money raised or anything like that. I needed to raise roughly $400,000, and I knew I would find it. I already had the track record of raising capital now for roughly a year and a half, well, a year, I guess, for the flip properties. So I knew the money would be there, and I knew it was a good deal. So I put it under contract and figure the rest out after. So that's kind of how that went.
That's a nice story to hear. That's very encouraging. So just for the sake of being practical, and correct me if I'm wrong, maybe that's correct. So the audience wants to know, they driving on a neighborhood, they start finding properties, they grab their phone and call the owners and ask them if they are selling. Is that the right way to do it?
Yeah. I've knocked on doors of single family homes, just like randomly asking people if they were looking to sell their homes. And I'm not a very like salesy push person. I'm not very pushy. Like I'm not extremely pushy or anything like that. But I find if you're just honest and upfront with people respect that, and they really respond well to it.
That's excellent. That's correct. One of the way I did it back in Toronto, I was going through a neighborhood. They were all tear down bungalows. So what I did, I didn't have time to talk to all of them. So I would drop a letter, handwritten letter, say, if you're interested to sell, give me a call. And I would get calls. And it's unbelievable.
Oh, yeah.
But you have to put your work in there.
It's surprising the response rate that you get. It's actually really interesting. And now that's kind of where I'm at. Now I'm parallel testing or split testing a whole bunch of different methods, flyers, different types of flyers like postcards, to just like different sizes of postcards, to like wedding invitation size, and different colors, and just seeing what responses I get better, or what the better responses are essentially. And handwritten, I've done lots of that. And yeah, it's for anybody out there looking for properties, or like they can't find good properties, start doing that. It's a great way to get going, and it's fairly cheap, especially if it's handwritten.
That's correct. The title of this webinar is how in 1.5 years you were able to get $1 million worth of investment from your investors. So you want to talk to us about this?
Yeah, definitely. So I think that's actually, it was a tighter timeline than that. I think it was in less than a year, I had $1 million of investor capital in the works. So yeah, basically how it worked, I was a part of a few different groups in Saskatchewan here, and I would go to networking events. And like, if you want an actionable tip, that's like the number one thing that I can give is, and you can probably agree with me on this, Ashton, is just get out there and network. Tell people what you're doing, what you're looking to do, and if you're excited about it and you actually have a good head on your shoulders and you know your numbers and know your market, there are people with money everywhere. There's a lot of money out there, and you probably don't even realize it. So if you have a deal or you want to get into something, just start telling people. So that's what I did. I found that first property. We did the first one, Vanessa and myself. We didn't raise any money on that. We had the capital to do that one. Then the one we found 2 weeks later, we found an investor for that. And that was, I think it was about $130,000 that the investor put up. And then, shortly after that, it started snowballing. We found another property and another property. I think we had 3 or 4 properties on the go shortly after, and they were all fairly lucrative properties. So, and like average investment was, I don't know, 150,000, or say 100, 115, 130, I guess would be average. But I had one investor, he had over $400,000 with us like shortly after. And it was somebody that like I never would have guessed it. I was just sitting with him one day chatting, and he was like, "What have you been up to?" And I was like, "Oh, I'm buying lots of real estate. I'm still working at mine. I got my job, but we're getting into real estate heavy now. We're working with a lot of people who want to invest in real estate but don't know how. And yeah, we have different apartment buildings coming up because I was working on a few different ones at the time. And we always have flips coming and going and stuff like that. So lots of opportunities, and it's really interesting. I love them. And then I started talking about the market, and the demographic, and like some of the fundamentals going on. And I think that's very interesting. And like data, I like data. I think that's super important. And if you can know that and utilize that in your market, you'll be so much further ahead of the competition. It's not even funny, but yeah. So that's where that investor came from. It was just a simple conversation. And then he basically said, "Oh, that's interesting. I'm actually interesting. I'm actually looking for some opportunities like that. So here's my email address." And he wasn't a close friend. Like he was my doctor at the time. So I was sitting in his doctor's office for like a checkup or something.
Okay,
So
a hint here, picking up from you, everyone, just go to your doctors tomorrow.
Yeah. But no, I'm just saying that money can come from anywhere, and you never know. Like you have I had no idea. I was just talking about what I like to talk about.
Excellent. That's a good news. So let's say I go to a network. First of all, what kind of networking group are you talking about? Should be specifically for like real estate or anything like business?
The ones that I go to are mostly real estate related. The one I'm talking about, it was a group in Saskatchewan called Real Estate Investors Group Saskatchewan, or RIGS. And I have a lot of friends in there that invest with us now. And it's a great network. Same thing. You think that you go into something like that and everybody's going to be active investors. There's a lot of people looking to passively invest their money also, or passively invest, but be a little bit more on the active side just to be able to learn from what you're doing. I find that lots too, actually.
So do you actively go out with your business card printed when you go to any different event or even casual conversation in the park? You give your card, say, if you want to invest, I can help you. Does that make sense?
Pretty much. Like if you're talking about like an elevator pitch, like even in a hotel, if I'm at a conference or something and I'm in the like wherever walking, and just I chat with everybody. I like to talk. I like to visit and just visit with people, and it always comes up. Like, and then people ask, "What do you do?" "Oh, I help people, or I invest in real estate and I help people create passive income." And then everybody always asks, "Oh, how do you do that?" And then it just goes from there. And then usually they ask you for your business card, and some people give you a call, some don't. But I've made some great relationships just like that.
Okay.
So it's all about just putting yourself out there and getting over that. Like there's that big mindset hurdle that took me a long time to get over. That like, oh, I'm not really a real estate investor. I'm just kind of like I just have a couple properties. But then you get over that hurdle, and yes, I am a real estate investor. I help people invest in real estate, and it sounds funny and it doesn't sound like it is a thing, but it is a big challenge for a lot of people, and I know that because I was there.
Okay. So how long altogether you said you are doing real estate investment?
About 10 years now.
10 years.
Yeah,
Now,
2010 I bought my first
are
property.
you still, when you go to this kind of event or even you buy something, do you have that hesitation or fear if you're doing the right thing? Because people are trusting money to you. So do
Yeah.
you still have that fear?
Oh yeah, I still have like it depends. Like right now I have a lot of deals on the go. So I was just thinking about it today. I was like, watch, I'm gonna have like 6 properties come up all at once. Like, and it's just Murphy's Law how things go. But just because I have a lot of offers out and they're all pretty reasonable offers, so I think a lot of them will get accepted. So I think it's good for people to be nervous. I think if you're working with other people's money and you're not nervous or you don't have butterflies, like I'm still confident. I still know it's great properties in great areas, and that's why I offered on these properties. But yeah, there's always has a little bit of hesitation, and I do think that's a good thing. I'd be a little hesitant to put my money with somebody who's just like, oh, ready to pull the trigger on anything and doesn't get scared, and like yeah.
And Fraser, with all of these investors, do you form a separate corporation for each of them? How does it work?
Yeah, so on the apartment side of the business, when you're raising larger amounts of capital, like I'm looking at purchasing a 50-unit apartment building, so roughly $5 million for purchase price. So I'll probably have to raise about $2 million for that. And with that, how we structure the multifamily buildings is we do set up a separate corporation for each building. So it's called a bare trustee. So it's an empty corporation that just holds title. It doesn't have any money. It doesn't operate any accounts, anything like that. It's simply a bare company to hold title. And then what happens is, say you have 4 investors on that for $500,000 each, they're going to get X% of that corporation and actually own the corporation. So they own the cash flow part of it, the capital pay down, appreciation, all the good stuff that comes with real estate. It's not just like a set percent interest that you get. It's you actually own the building.
Okay, sounds good. So for all of the investment you do or you have, what is your goal? Is it more of creating positive cash flow or you're aiming at growth? What is your direction?
I like cash flow. I think cash flow is extremely important. I do see the benefits of appreciation and like strong like market growth and everything that goes with that. But I think cash flow is so important just because you can do anything with cash flow. You can build it up into huge reserve accounts. You can redeploy it. You can, you're just so flexible when you have cash. And if you're playing the appreciation game, if you have X million dollars in property and you are negative cash flowing, playing strictly appreciation, or even say you're breaking even, if anything happens in the market, and it's just a lot riskier in my eyes. You just lose some of the flexibility because you're banking on that one thing instead of cash flow, appreciation, and everything that like it's just less flexible. So I definitely go for cash flow.
How do you see the market in Saskatchewan?
I think that we're just coming out of a slump right now, so I think it's a really good time to buy. And this is awesome. I really like talking about this. So Saskatoon's it's a really good market. There's a lot of different market drivers. There's heavy agriculture. There's a lot of mining going on. There's lots of manufacturing, stuff like that. A lot of trickle down from these big mining corporations, and agriculture is just getting huge right now. So implement companies, chemical companies, stuff like that, grain companies. Saskatoon is especially good. There's certain areas that I do like. You have hospitals in one area right beside a university, and you have a really expensive neighborhood right there. And then surrounding that, you have a lot of apartments and a lot of rentals. And I think there's a lot of opportunity to be had because what we're doing and what we're finding really works is we're talking directly with a lot of the owners and a lot of the owners are actually, they're baby boomers, 70 years old, 80 years old. And they're finding with vacancies being so high in Saskatoon, or being elevated, they're just getting tired of it. They're tired of, like, they have 1970s buildings, 1980s buildings. They haven't kept up on maintenance. It's starting to catch up with them. So we're basically approaching these buildings and these building owners, and there's huge value plays to be had. Like this 16 unit, it's exactly what I described. And there's about $300,000 in equity on that property on the buy because we bought it right. And we don't even have to renovate the units. So that, like, these are the kind of deals that we're finding right now. And I'm having a lot of conversations with owners, and it's pretty consistent across the board. It's really interesting, actually. So we're trying to provide a solution to help them sell these properties for a price that they want. And a lot of them are open to talking about vendor takebacks and various creative financing methods. So it's good. It's really good.
Excellent. So would you consider coming to Toronto, or you find Toronto expensive?
Toronto's too expensive, I think. I do like there's a ton of potential for the growth, like you were mentioning, but just that cash flow aspect of it, it's so hard to cash flow in Toronto and the Golden Horseshoe and areas around there. I think if you go up a little bit north, I think there's opportunity, but Toronto and Vancouver, and I'm looking at Vancouver very closely for apartment buildings. I want to go and start actually diving into the markets there, approaching owners directly, kind of like what I'm doing in Saskatoon. And I think there's some good value add options out there. So I would do Toronto, or I would buy in Toronto, but it would definitely have to be the right property. It would probably have to be something off market that myself or somebody found and brought to me, and then I would look at partnering with them or something like that.
Excellent. I find in Toronto, the positive cash flow is not really there. The best way at this moment is to buy multiplexes, or at least duplex, and in the neighborhood that they really pay good for their rent. So that's the secret. Otherwise, you have to go a little bit away from GTA. We're talking about like Kitchener-Waterloo, some part of Hamilton. Student housing is there, but that's a different ball games. It's not for everybody. If you go to north of Toronto, I recently bought a house there for $650. The rent is okay, so you almost break even. And but like talking about Barrie is growing well. It was growing for the last few years, and you really have to cherry pick where you buy. And sometimes I buy an hour away from Toronto because that house shows green signal, so I can jump on it. But you cannot say, okay, here is one neighborhood in Toronto is growing well. Let me close my eyes and pick anything I can from that neighborhood. That's a wrong approach.
Yeah, I agree. I think that's a wrong approach in any market, and it's scary that some people actually do that. Like, you know,
I know people that burned after buying 6 or 7 homes, and when I look at their portfolio, was wrong one after another. But that's what they do. Now, if we want to learn from some of your mistakes, do you remember any of the big? I know you're perfect.
I'm not perfect by any stretch of the imagination, but yeah, honestly, just communication is a huge one. I've had like, it's just super important. I've had projects where like we go over budget or something like that, and if it's not communicated right away, and I say this lots, that communication is huge in any relationship, like from mine and my wife's relationship to working with investors to buying properties from off-market sellers. It's like communication is huge across the board, and if you let that communication go, relationships will break down. And if there's capital involved, it's not a good situation. Like I've had some relationships. Well, I had one relationship actually, and it kind of went down that path. And we're still friends and stuff like that. But it was just, we had some overages on one of our projects, and it wasn't communicated, and we had lots of projects on the go. So we I think that investor felt that that he wasn't being prioritized, if that makes sense. So that was a huge lesson for us. it just opened our eyes to how huge communication is in any relationship. And honestly, I like a lot of people probably wouldn't say that on an interview, but I kind of like, I pride myself in being super open and transparent with all dealings, and that is definitely one thing that will hurt a relationship for sure. And like, you can probably attest to that too, Ashton.
Absolutely. I agree with that. Now, summing up what you said about getting investors involved with your projects, uh, is networking, which means clearly exposure. So you have to go out there and talk to people, even over making barbecue with your friends from whatever background they're coming from at work. And adding to what, actually agreeing with what you said, get excited and be knowledgeable. People would challenge you with different things. Just get ready to answer them. The market goes up, the market goes down. Here's the reason, oh, no one's going to buy in this neighborhood. So have an answer ready for them. And that comes with a little bit of experience, a little bit of talking to different savvy investors, and just getting into the market a little bit and get closer to what's going on. Even if you want to monitor for some times what is selling, what is not selling, just chit chat with another real estate investors. That would give you some knowledge that would help you when you talk to someone. They know that you really have some knowledge. I've seen people buying their very first property with someone. The reason that someone in-law or friend got involved with them, even though they didn't have experience, was the enthusiasm. He was so driven. I'm talking about the founder of Rain Canada, Dan, or what is his last name?
Oh, Don Campbell.
Campbell. Yes.
Yeah, Don's awesome.
That's where he bought his first property with, I think, one of his in-law. But he was so excited, and he said, "Okay, slow down. We are with you. Let us give you the money, and you can go in there and start buying." And that's where he started with his first property. If I remember properly, he was working part-time in a supermarket. So some of the mistakes that I can bring up, I've seen that with many other real estate investors, is over leveraging. You are guessing, you get emotional, you like to call yourself, I have 10 properties, you over leverage the potential that you have. You go far on the edge. So, and that's very dangerous. The second thing I would say, you get emotional. You see a house, you don't really get into the numbers, you don't do your due diligence, you fall in love with the house. If you are with someone that you like, let's say husband and wife, you want to invest in real estate, you go see the property, oh, this neighborhood is nice, look at the backyard, look at the front yard, oh, there's 3 bedrooms. And one of the things I always hear is, we want to buy something that one day we can live in there. Yeah. Don't. That is not your house. Yeah. Keep your life separate. Am I right, Fraser?
Yeah, 100%. If you want to be an investor and you want to actually be an investor, there can't be any emotional attachment. It's just strictly numbers, and that's how I look at it. I hear that lots too, just people looking to just, and like, foresight is good. It's good to look ahead and try to predict or project the future and project where you want to be. But I agree, you do need to separate that from your actual investments. It's like, if you actually break it down on an ROI basis and just look at your returns, it's like, you'll find better properties out there most of the time versus that property that you're already attached to.
Imagine you buy a multiplex and say, one day I have to live in there. Excuse me, unit you want to live in?
Yeah. I want to live in one of those units eventually.
Exactly. No, that's my experience with my wife. The first house we bought, she said, buy something that is good. We can one day live in there. Now, the house I bought was in Kitchener. We were living in Toronto. I kept that house for over 10 years, close to 15 years. She never, ever saw the house. Actually, she saw the pictures only. But eventually I sold it and pay off my kids' education at university. So there are many pitfalls that you have to be careful when you want to invest as a professional real estate investor.
Yeah.
At the end of the day, the good return, the great ROI would come back to you. So why don't you do your due diligence?
Yeah.
Right. So for a beginner, a newbie of real estate investment, if they want to get into multiplex or just a simple house, what kind of suggestion do you have, Fraser?
Just be active, be enthusiastic, get to know the market that you want to work in, and get out there. Don't say you're doing something, because I see that lots too. Like people, they want to invest in real estate, and then you actually talk to them. Okay, what did you do today, or what did you do this week? And they're like, oh, well, I looked at a couple properties online. Like if you actually want to buy property and actually want to get into this, go out and find the properties. Like actually go walk properties, and that could mean anything, like walking properties, making connections with different agents, making connections with different investors in your area or in your city. Start trying to find ways to get a hold of owners, and that could be calling for rent signs on front lawns. Go on Kijiji. Everybody's information is right there under the for rent section, like for rent single family homes, for rent apartments. All the information is there. It's just pick up the phone. And you will find properties if you start doing this stuff.
Great. Fraser, you also do mentoring, correct?
Yeah. I do. Or go ahead, sorry.
No, go ahead. I want you to elaborate on mentoring. What is that you do? I do mentor people in my circle around in Toronto mostly. I'm not in Saskatchewan, so I'm not familiar with your market. But there are people that I mentor, like they call and we have a conversation, sometimes Zoom conversation. But I wanted you to tell us more about mentorship and first of all, the importance of it.
Yeah, and I'm still very active in real estate investing, and I have the mentoring side of the business. I don't take on a lot of clients, but I am always open to conversation about it. And yeah, basically with that, it's just you have access to me for like a set amount of time per week, and it's Zoom calls, and I'll help you with anything from analyzing properties to like keep you on track to like if you have a big deal going on, I'll help you analyze it. I've helped people negotiate with real estate agents before. So like when it comes to stuff like that, if somebody's interested and we do have a relationship that we want to pursue coaching or mentoring under, then yeah, we go all in. And I help you find properties and get some
What
stuff.
is your phone number for the audience here? I'm going to type it here into the chat.
Yeah, so my phone is 1306.
Hold on.
292
292
9748.
9748.
Yeah.
Okay, so your phone number is 306-292-9748.
That's it.
And
okay, so coaching is so important. And like not even to go through me, but just like find somebody that you can, if you're new or want to get into investing, it's extremely important. I've had people coach me. I'm sure Ashton, you've had people coach you or people that you've looked up to over the years. I heard you mention Don Campbell earlier, and it could be somebody even like that. And it's just so important. So just get around the right people, and you'll get to where you want to go.
Last question from me. Do you have any plan in retirement? Like in a year, you're going to retire? What's the plan?
I'll never like retire in quotations. I still do work a job, and my goal is actually in a month here. I have I have a little boy on the way, so that's super exciting. Yeah. So I'm going to take parental leave, and then I'm probably not going to go back. So that's going to be my retirement from the 9-to-5 world, and then I'm going to be doing real estate full time. And I'll probably never retire. Like I grew up on the farm. My grandpa lived on the farm till he was like 91 or 92 almost, and like just worked until like just keep working. Like I like what I do. I'll probably never ever stop, and I might slow down, but that's pretty much retirement for me. And take a little bit more like vacation and stuff like that, but spend time with family and friends.
I've seen different investors. They have different strategy. I've seen one that is for 10 years, they keep buying one home every year. And then on the 10th years, they stop buying, start selling 10 years old. And with the money the profit they generated, they buy smaller unit and they get 1 year of work. And then on the 11th year, they sell the number 11, like 11, and they repeat the same thing. So there are different strategy in terms of going hands off from actual 9 to 5 job. So that's a great things that I see with real estate investment, and I fall in love with this strategy that we can use and do every single day with this kind of investments. Now, if no one has any question, I can. I had one question that, in terms of mortgages, do you only work with one bank, or how do you do that? Do you have any strategy you use, like private lenders, B lenders?
Yeah, so that's a good question, actually. So the first, what would that be? The first 7 years, I guess, of us buying property, we use conventional financing. So we just used one lender, pretty much just because they were the best to us. And after the 7 year mark, we started working with investors, or 8, 7.5, wherever that was. We started working with investors and private lenders, and the rest is history. So we don't even deal with banks anymore on the single family home side of the business. So we just do private lending, or we have our investors and we use private lenders and couple them together through like various combinations, I guess. And like one example of that is, say I have an investor, or say I bought a property, and this is actually a recent deal that I did. I bought a property for $260,000. I was gonna flip it, and my investor had RRSPs, had $100,000 in RRSPs. So I had to come up with a 20% down payment, or actually it was 30%. Yeah, or 30 some percent. Anyways, and so what we had to bring to the deal was $90,000. So my investor brought $90,000 out of his RRSPs, and then I coupled it with a private lender in Alberta, and he had his investors, or his private lenders that he uses, and he funded the rest of the deal. So essentially I had 2 investors on that deal. So I closed on it, and then 11 days later I resold it for $300,000. So gross $40,000 in 11 days. And then I paid everybody out. I think and that's right when the pandemic hit. So everybody was extremely leery of, like, there was some very, very intense conversations with investors, just hearing everybody's opinions on what's going on. And there was a lot of people that just just wanted to sit tight for a little bit. And 100%, I have no problem with that. And so anyways, with that, I actually had to put up some property as collateral just for added security, which I don't normally do. Usually they're just secured on the property that they're buying. But I just put up an extra layer of protection for the investor. So that is one way, and that's the most common way that we fund deals on the single family side right now. And then on the multifamily side of the business, we work with like banks or lending companies, essentially. There's a whole bunch of them. So basically how those work is we'll bring the down payment through our investors, and then we couple it with bank financing or conventional financing. And depending on the deal, we'll do CMHC financing, just because you get such a good interest rate right now, like 1.65% or something on a 35-year AM, which is insane. And that's what I love about real estate, though. There's unlimited ways to do it. You can do it whichever way works for you. You just have to find the right people. Yeah,
you can even buy home for like VTB.
You can buy full vendor financing if you find the right seller. Like, you can buy multi-million-dollar apartment buildings under full vendor financing if you find the right seller.
That's right.
It's awesome.
Talking about flipping fixer upper, do you have any rough number that any fixer upper I buy, I have to make 10% profit? Is that the way you do it? Is that correct?
Yeah, so basically how it works and the numbers that I look at, so on the flips, depending on the kind of financing, going back to that, and there are variables in it on, like, it'll affect your fixed costs. The renovation costs obviously come into play, but we try to purchase around the $250,000 mark, and then we try to sell around the $400,000 mark. So anything over $30,000 in profit is something that I normally look at. And what we do in the flips now, we don't do equity investments with the flips, or the flipping part of the company. We just do this, like, we the debt model investing basically. So we'll pay X percent, 10% or 12% interest on the money that we borrow. So the investors are very happy. It's added security for them, because a lot of people don't realize when they do equity investing on flip properties, if there's a shortfall or anything like that, or overages on the renovations, as an equity partner, you're actually on the hook for X dollars that you're over. If you're a 50-50 venture partner or 50-50 partner, you're on the hook for 50%. Whereas debt model investing, so you're essentially the bank, and this is what we like to do now. So we'll just pay you a flat 10% or a flat 12%. And if there's ever any overages, and we're pretty good at analyzing properties now. I don't usually have overages or anything like that now. And but if there was, we would have to pay you. You get your money no matter what, or you can foreclose on the property. So
Excellent.
it's
Perfect. Thank you very much, Fraser. Do you have any question from us from Toronto?
No, I don't think so. I think we covered most of it. I always find the market super interesting. I love watching the areas around Toronto and like Hamilton, and I kind of keep an eye on what's going on out there. And I really like it. I think there's still a lot of opportunity out there. I think there's
It is. Hamilton is moving because if you can buy a mixed use, means the main floor is a store, second floor is residential. That is a good one to buy in let's say in Hamilton. And the price.
Okay, and why is it why would it be a good one to buy?
Because it's diversified. There is always someone that might need a business or someone that needs a residential, and the price is very reasonable. Many of them are overlooked, and no one's taking care of them. So I noticed in Hamilton, if you want to stay in downtown Hamilton, there are some of those opportunities that you can take over and refurbish it or make it beautiful and then flip it. Or the trick here is, even with the student housing, the trick here is to bring the tenant, show the return, ROI, and as soon as the investors, not all investors looking for flipping, right? Some of the investors want positive cash flow. So if you can take over a property and make it positive cash flow, then they would jump on this deal. There's no question. So that's one of the things I do here. So I go through a lot of analysis of each home by itself. It's time consuming.
Yeah, no kidding. That's good though. It sounds like you like it, and that's interesting about the mixed use. I've never heard that about Hamilton. So
yes,
we'll have to chat about more about that one day.
Sure, absolutely. Well, it was a pleasure have you over and my webinar. I'm going to read again, your phone number is 306 for whoever wants to reach out to you. It's 306-292-9748. And Fraser, thank you very much for joining us and coming on this program and inform us of what's happening, awesome, not only in Saskatchewan, but the techniques that you use, which is universal. You can use it anywhere. And look forward to call you up and have you back here again.
Yeah, awesome. I'm looking forward to it. And yeah, you can just connect with me on social media too, or any medium basically, and I'll get back to you. So, but yeah, thanks for having me, Ashton. It was a lot of fun. And yeah, we'll have to touch base here shortly.
Excellent. And thank you everyone for joining us for today, and see you next time.
Awesome. Thanks everybody.
Yeah. Bye-bye.